Hello and welcome back to School of Stock Markets YouTube channel everyone, and we are back with another stock research for all of you. So before starting the video, I would like to mention a disclaimer. The video that we present to you contains factual figures of a company which are available on the company website as well as on other media houses. We do give company's business information which is also available on the company's website as well as on other media houses, and we do put our opinion. These videos in no sense are intended to give any stock tips or advice. You should do your own research before investing or trading in the stock market, right? So let's start with the video. So today the stock which is in consideration is ADANI WILMAR. So ADANI WILMAR is a leading FMCG food company in India. Many of you must have heard about it. The IPO of this company came earlier this year in February itself, and the issue price of this stock was 230. So since then, the stock has made a high of around 800 and it is currently trading near the range of 650 to 670. So this stock has already proven its good value in the market, and still we personally believe that it can give more return to the investors in the future. So that's why we are doing our own stock research in it. So let's see about the ADANI WILMAR's business, or what business they are into. So majorly you will find they have three major verticals of their business. First is edible oil, second is industry essentials, and third is food and FMCG, right? So in edible oil, they have a flagship brand, Fortune. Many of you have heard about the Fortune. Fortune is a really big edible oil brand in India. Many households use this brand, right? So this is their flagship product, Fortune. So let's see what else they offer. So in total, their edible oil range, they offered 9 different type of edible oils, right? Which include soybean oil, palm oil, sunflower oil, rice bran oil, mustard oil, groundnut oil, cottonseed oil, blended oil, vanaspati, and specialty fats. So specialty fats is their product which they do supply majorly to the bakeries and cafes and restaurants, and then they have other brands also in the edible oil. So in edible oil, their flagship brand is Fortune, but they do have different brands as well, like King's, Adha, Bullet, Rag, Jubilee, Avsar, Golden Chef, and Friola are other brands which are also available at ADANI WILMAR other than Fortune. So these are also brands for the edible oils, right? And here you can see edible oil, they sell under the name of the Fortune, and then here some products from King's as well. King's brand, Bullet, you can see Adhar, here you can see Rag as well. So product of the Rag is also available here. And here you can see their specialty fats. They have very large range of bakery fats as well. Frozen desserts and ice creams also they do have. And then their Vanaspati and Friola under the name of the Friola, their frying oil, which is in the industrial packaging, big packaging you can see, right? And now let's move to their second vertical of the business. Oleochemicals, including stearic acid, soap noodles, palmitic acid, oleo acid, and glycerin, which are primary ingredients for home and personal care products, including soaps, detergents, cosmetics, polymer, pharmaceutical, and industrial rubber. Castor oil and its derivatives such as stearic acid and racine oleic acid for medical, pharmaceutical, cosmetics, and aeronautical use. ND-oiled cakes, which are byproducts after oil extraction from soybeans, mustard seeds, and castor seeds, and used at livestock feed. So this is their second vertical of the business. You can see oleochemicals, which is majorly used in the cosmetics and soaps. Then here you can see their castor oil and its derivatives, and their different products that they offer for the industrial essentials, right? And then their third and major vertical of the business, which is food and FMCG. So if we move to the food and FMCG, you will find another time Fortune as their flagship brand, and they are offering different products under it, like food products, rice, different sort of rice like biryani classic, biryani special, super basmati rice, Rozana basmati rice, and different other products. Then soya chunks, high protein products, besan and sattu, then pulses, and then khichdi premix, wheat flour, sugar, and then again soya chunks. Snacks are also available, pohas for breakfast, and another FMCG products is soap under the brand name of A-Life, and then the hand wash and sanitizer, which they do mention on their website that they launched it in the 2021 itself after the pandemic, right? So these are the three business verticals for the Adani Wilmar, and their flagship brand is Fortune, which you can see in edible oil as well as and their food products also. Now let's move to the financial figures, how the financial figures for the Adani Wilmar looks. So here you can see we have two comparative figures, which is from the March 2020 and March 2021 in rupees million. The data for the March 2022 is not yet available, so we will stick to this data to compare the company. You can see there is a slight reduce in the assets, but obviously our main focus is on the statement of profit and loss. So if we move to the statement of profit and loss, you can see a good rise in the total income or total revenue of the company. You can see from 297,649.24 millions to 371,944 million. So it is a quite good rise in the revenue of the company. And if you will look at the profit for the year, you can see profit of the company has also increased. A really good increase we have seen in the profit, almost a 2,000 million increase we can see in the profit of the company, even more than 2,000 million we can see here in the profits. If we move to the cash flow statement for the company, in the cash flow statement also you can see we have a net cash generated from the operating activities, which is also increased. You can see substantially increased, almost 1,500 million rupees increased in the cash flow from the operation, which is a very good thing, which is a very positive sign. They have invested in their investing activities less than the previous financial year, but good amount they have invested, and then they greatly used the cash to repay their financial cost, right? They have a repayment of net non-current borrowings. You can see big repayment of the non-current borrowings is one of the major cause that they have a big negative figure in that cash flow from the financing activities. Their overall cash and cash equivalents from the end of the year has decreased because of this big payment of the financing cost, right? But the positive thing is here that they are able to generate their cash from their operating activities, which is definitely a good sign, and we should always look out for this particular sign in the companies. Now let's move to the bullet points which we have made for you to give a brief about the company, right? That how this company looks. So first of all, you can see sector is FMCG. Their market capitalization is around 90,000 crore rupees. This is obviously a blue chip stock, large cap stock. This is, and their enterprise value stands at 87,567 crore, which is really good. Promoter holding is 87.94%. This is a really good sign. Always I mention in the videos that the promoters holding is a really major sign in any company, and you can see here promoters are holding almost 88% of the company, which is a really good sign. Foreign investment is also good at 2%. Promoter holding pledge is 0%, which is another good sign. No shares are held pledged by the promoters, which is a good thing. Earning per share is quite fair, 5.6. Now P ratio you can find, which is almost double to the industry standards, but you can see this is a big company. So in the big companies, this sort of high P are visible. But as far as I see this company, this is a growing company, and in a growing big company you will always find P ratio to be high, but still we think this company has potential because their return on equity and return on the capital employed is really good. They are continuously decreasing their debt to equity, which can be and cannot be a good sign, but ROE and ROCE are really good. That's why we see that even after having a high P ratio, this company do have potential. and you can see effectively using shareholder fund because return on equity is improving since last 2 years. So that's why we thought that this company is a good investable company, and you can do your own research as well. Efficient in managing assets to generate profit because you can see return on asset is also improving since last 2 years. Company which have low debts, and if company has low debts means company is taking less risk, right? So that's why this company is good investable company. And annual profit is improving from the last 2 years. We have seen the proof in the statement of profit and loss when we discussed that. And book value per share is also improving from the last 2 years. Company with zero promoter held and highest recovery from 52-week low. This stock made a low on its opening day itself. It went to 227 and even lower to that, and after that it recovered and went as high as 800. So, and right now this company is trading around 600. So this company is definitely having a good recovery rate also. That's why we think that this is a good and investable company. You can do your own research before investing. So this is it for today, guys. We'll see you in another video, and if you like the video, please do share this video, subscribe to our channel.